Code, demystify, learn, DQ Learning. Only on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, India's first live streaming digital news service. I am Jayesh Khilnani and I have Agam Vakil on the show with me to give you a check on the F&O space. But first, let's have a look at how the trade setup looks like this Friday morning. If you have a look at the handover from the US market, that was extremely positive with the Dow Jones climbing more than 200 points. In fact, all three key indices in the United States climbed nearly 1% or more for each of them. As far as the European indices were concerned, we had green ticks over there as well for all of the indices that you see on the list. And if you have a look at the Asian indices, they have also begun on a positive note, with the Nikkei trading about 0.4% positive and the Hang Seng trading about 0.8% in the green. And now, as far as Indian market opening is concerned, the SGX Nifty is in fact trading with a positive bias for about 40 odd points and expected a start above the 10,650 mark for the Nifty itself. Now, if you look at some of the key areas that traded overnight, we had positive cues coming about for them as well, with Infosys, Tata Motors and Vedanta climbing more than 1% each for themselves, and HDFC Bank closing positive as well. As far as the losers were concerned, once again it was led by Wipro, which declined about 2.9% in trade. Clearly the stock to watch out for today as well. Yesterday we had a negative close for Wipro, so wait and watch how this actually pans out. Now, if you look at the commodity space, mild cues coming in from the oil markets, where both WTI and Brent are trading with a negative bias of about 0.4%. In fact, WTI has slipped below the 68 mark, and Brent is in fact now trading below the 75 mark as well. Now, if you look at the base metal space, that is where we got positive cues. In fact, most of the base metals except for copper, those closed positive on the London Metal Exchange, with aluminium and lead climbing more than 1% each for themselves. Now, if you look at the Shanghai Futures Exchange, base metals have in fact opened on a mixed note. We have aluminium and steel, which is trading positive, while we have copper and zinc, which is trading currently negative. Now, if you look at the gold prices as well, we saw a slight dip come about for gold prices below the 1320 mark now on account of a surge in the dollar index that we have seen in recent times. Now, if you look at the fund flows that we got for ourselves, have a look at the foreign investment result over there. They've sold more than 1,000 crores as of yesterday, while the DIs pumped in nearly 700 crores. Now, if you look at for the month itself, the trend continues. Domestic institutions have pumped more than 7,500 crores, while the FIs have in fact sold nearly 5,000 crores worth of equity. Now, if you look at some of the key indices that we got, the Nifty Bank was positive. That closed about 0.8% in the green, and the Nifty Mid Cap also managed to surge about 0.4%, while the Nifty Small Cap Index closed largely flat with a gain of just about 1.5 point. Now, if you look at some of the key indices that we got in terms of the gainers list, we had the Nifty FMCG index, which surged 1.2%, while we had the Nifty IT index, which also climbed about 1% for itself. As far as the losers are concerned now, we had the Nifty PSU Bank once again topping the charts over there, 1.2% lost for that index, while we had the Nifty Infra Index, which also declined as much as 1%. Now, the India Wix, a measure of the volatility, that in fact managed to close just above the 12 mark, but intraday yesterday did slip below 12 as well, and ended the day with a cut of about 2.9%. So we'll have to wait and watch how the new series actually pans out. In terms of what led to the 47-point gain on the Nifty, we had Yes Bank, ITC, TCS and Infosys, which contributed positive, while we had L&T, SBI, Bharti Airtel and Axis Bank, which were the decliners in trade. But Agam, what can we expect from the first day of the series, last day of the week?
Well, Jayesh, consolidation has come through, and when it comes to the rollovers, starting off the Nifty rollovers, largely in line with the previous 3-month average. When it comes to the Nifty, and especially the May open interest has surged by as much as nearly 73%, and it's the same for the Nifty Bank. However, the Nifty Bank rollovers are slightly higher than the previous 4-month average at around 83%, and a substantial amount of longs coming in as well. But when it comes to the other variables, specifically specifically the VIX, that fell down once again, inching back towards the mark of 12. And because it was the rollovers as we moved into the new expiry, the Nifty put call ratio also rearranged at around 1.48. That said, in terms of changes in open interest, we saw unwinding in the 10,600 call, a little more writing in the 10,500 put. But when it comes to distribution, the total distribution across all strikes, well, we continue to see a 200-point range for now, because maximum open interest remains with the 10,500 put and the 10,700 call. Moving in, we have plenty of stocks to watch out for. So we have DCB Bank, strong rollovers coming in. As the bank and the underlying advanced, we saw longs come there. And on the losing end, we saw weakness in something like a Marico. Do remember, we will be moving into earnings next week for Marico, and ahead of its earnings, we're looking at some amount of weakness with rollovers high as well at around 71%. And finally, keeping an eye on PC Jeweler, which continue to see losses. In fact, an extension of the weakness that we saw day before. Rollover was standing at around 86%, so a lot of shorts building in there as well. So these are some of the stocks that we can keep an eye on, and the benchmark indices, of course, and that will move on account of the earnings that we have in today's day of trade. But now let's go across to Yuan Man for the top headlines across the globe.
The European Union is telling the City of London that UK banks will face similar restrictions to US institutions after Brexit, and warning that markets should prepare for a messy no-deal divorce. Negotiator Michel Barnier says the city should expect no favors, effectively saying the EU does not need it. The UK government is holding out for a deal based on mutual recognition, but the EU says that's unacceptable. Prime Minister Najib Razak says Malaysia will let financial markets decide the direction of the currency as he focuses on improving the economy and on his reform agenda. Najib's outlined a plan to increase liquidity in the equity market and promised more income and corporate tax cuts over the next half-decade. The ringgit is among the best performers in emerging market currencies this year.
The markets think it's about, 360, 370 is a fair value. But we don't believe in trying to force the issue. What we do is just strengthen the fundamentals.
Japan's factory output expanded for a second straight month in March as economic growth continued into 2018. Industrial production rose 1.2% from February when it gained 2%. Output climbed 2.2% from the previous year. Recent growth has been supported by overseas demand for Japanese industrial products. However, U.S.-China trade tensions could put that at risk. ECB President Mario Draghi says policymakers declined to discuss the end of the bank's stimulus program or even the strengthening currency as they focus on the state of the euro area economy. The Governing Council spent its two-day meeting assessing a series of weaker data. Draghi admits the momentum softened at the start of the year, but says he remains confident in the durability of the recovery.
Overall, however, growth is expected to remain solid and broad-based. Our monetary policy measures, which have facilitated the deleveraging process, should continue to underpin domestic demand.
Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Yvonne Mann. This is Bloomberg.
Back to local equity markets. Stock of the day is Hawkins Cookers. Porinju-led fund has bought in 1.6% stake at the counter for a sum of around 24 odd crore. Now, EQ India fund has bought in 0.9% stake in the counter for around 13 odd crore. They've bought in a total of 46,000 shares at a price of around 2,811. Another Porinju-based fund, that is EQ Intelligence India, has bought in 0.7% stake in this counter for a sum of around 11 odd crore, has bought in a total of 39,000 shares at a sum of at a price of around 2,811 per share. On the selling side, we have Hober Mallow Trust, which has sold in a total of 2.2% equity in the company for a sum of around 33 odd crore. The trust has sold in total more than 1 lakh share at a price of around 2,811 per share. If you look at the shareholding pattern, promoter shareholding in this company remains significantly at a decent level at more than than 55%. Public shareholding stands at 44%. If you look at the financial, well, it's not been a great picture, at least from a 9-month perspective. If you look at the sales figure, it's up as much as 8% to a number of around 383 crore. Also, you have the EBITDA, which has actually come down on 9-month basis, year-on-year basis for this company to around 49 odd crore. Margins have somehow remained a little bit stable for this company, but then PAT is just a muted growth that we're looking at of 5%.
Let's get you a check on the commodity space, starting off with oil prices, currently trading about 0.3% in the red. However, the focus remains on the Iran deal, and we have also picked up that US President has signaled that he would indeed ditch the deal that is likely to take place. As far as brokerages are concerned on oil markets, Citi has come out with a note in which they say that the US will most likely become the largest exporter in the world, going into next year. So we'll have to wait and watch how it actually pans out. As far as the base metal space is concerned, most of the base metals, except for copper, closed positive overnight on the London Metal Exchange. In fact, the index surged for the second consecutive day. 3 metals were in particular focus: aluminium, zinc, and copper. As far as the aluminium prices are concerned, the bears have been caught on the wrong foot as the supply concerns still persist in the market. As far as copper prices are concerned, traders have in fact turned neutral, on the back of expectation of demand actually peaking out. As far as zinc prices are concerned, we got an inventory data which signaled that the inventory climbed nearly 9% to the highest level since November 2016. As far as individual base metal moves are concerned, we had aluminium and lead which closed more than 1% higher. And if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a mixed note, with aluminium and steel advancing, while we have zinc and copper which have declined in trade. As far as gold prices are concerned, some bit of dip came about for gold prices on account of the surge in the dollar index that we have seen in the recent few days.
Shifting back the focus back to equity markets, bunch of earnings that we're tracking this morning. To begin with, Biocon, that's reported in line with estimates number. If you look at the revenue growth, we are looking at a 26% growth there to a number of around 1,169 crore. Net profit, however, has just risen by 2% to a number of 130 crore. Muted, looks like muted on the face of it, but pretty much in line with estimates. Finance cost, which is shot up as much as 3 times for the company, has weighed on the bottom line performance of the company. EBITDA growth has also been strong, 24% growth there to a number of 232 crore as compared to the estimates of a roughly more than 233 crore. Margins at 19.9% as compared to nearly 20.3%. A little bit of contraction that we're looking at. Rallis India, however, is a counter which has reported weak set of numbers. If you look at the revenue, it's a muted 7% growth there, and if you look at the net profit, that's almost declined by 36% for this counter on account of the weak operational performance for this counter. If you look at the EBITDA, that's almost fallen by as much as 21% for this counter, and the margins have shrunk to 8.9% as compared to 12.1% that we saw in the corresponding quarter. IEX is the other set of number that we're tracking. The stock is expected to react negatively, though not on account of numbers, but then the fact that the company the board of directors have decided not to go ahead with the buyback plan. If you look at the top line performance of the company, revenues is almost up by 8% for this counter. Net profit has shot up 15%. EBITDA at 23% growth that we're looking at to a number of around 43 odd crore. And margins for that matter also remain decent enough at 78% as compared to 69%. In other news that we have this morning, IDBI Bank, 15 of them have actually been identified or named in the bank fraud case, according to an investigation which was held by CBI. The locations, the investigation was conducted across 50 locations, and the investigation relates to an alleged rupees 6 billion loan fraud at the bank. Also, separately, the bank has said that it has, has been completely provided for the NPA of Axel Sunshine in December 2015. Separately, Fortis Healthcare, that's also expected to remain yet again in focus, because the company is expected to discuss further on the restructuring plan and the binding bids by IHH and Manipal. Also, the last one that we're tracking this morning is Signed, where the company has acquired semiconductor firm business for an all-cash deal of around $17 million.
Well, Axis Bank has reported its first ever loss in the fourth quarter, a net loss of 2,189 crores, missing the worst of analyst estimates as well. In fact, it's the new RBI guidelines on NPAs and accelerated provisioning from its already classified stress book, which is said to be responsible for the accelerated provisions and hence the kind of hit on margins that we have seen. That also restricted the net interest income growth, which came in flat at 4,730 crores. The operational profit was down about 16% for the quarter. Lack of support coming in from fee income growth, which was just flattish during the quarter, despite it being a seasonally strong quarter for the bank. And hence provisions spiked sharply to 7,100 crores. And all of this was despite a loan write-back or tax write-back of 1,300 crores, because if it was not for that tax write-back, the net loss number would have only looked worse. Business momentum continued with the loan growth coming in at about 18.5%. Deposit growth was slightly muted at 9%. Let's talk about the asset quality parameters. The gross NPA jumped to 6.7%, just from 5.3% in the December ended quarter, and we saw total gross addition of 9,000 crores to the NPAs just on a sequential basis. The bank recognized slippages of about 16,500 crores, and they said that most of it has come from the power sector, where the NPAs are now northwards of about 40%, so reflecting the kind of stress that everybody has been talking about on the power sector of late, and also on account of the recent RBI guidelines. Most of the slippages have come from the corporate books. Out of 16,500 crores, about 14,000 came from the corporate book itself, and within the corporate book, 90% of it has come from BB and below rated book, is what the bank has said. Overall, BB and below rated portfolio has reduced by 44% sequentially to about 9,000 crores, and the watch list has nearly been bound up, stands at about 428 crores. So by next quarter, it won't exist. But overall, it's the big impact of RBI regulatory guidelines and the stress in the power sector, which has led to a first big loss for this bank.
Reliance Industries will be reporting its numbers today in the evening. Now, if you see the headline numbers, the revenue is expected to rise by close to 22.5% to 89,700 crore. This will be the highest revenue growth that the company will see in the last 34 quarters, mainly on the back of higher crude prices. Now, EBITDA is expected to rise by 9% to close to 15,000 crore rupees, while margins are expected to decline to 16.7%. Now, net profit, on the other hand, is expected to rise by around 6% to 8,900 crore rupees, and this will be the 8th consecutive quarter where the company will see a rise in its net profit. Now, gross refining margin, that is the key number for the standalone refining business of the company, is expected to come down a bit to around $11.2 per barrel, mainly because of this weaker Singapore gross refining margin, that is the Asian benchmark. Now, Singapore gross refining margin averaged around $7 per barrel in the fourth quarter of financial year 2018. Now, because of this, the company's premium to Singapore gross refining margin will also come down to around $4 per barrel in the fourth quarter of financial year 2018. On the back of this lower gross refining margin, the company's refining business is expected to be a bit soft, but the petchem business is expected to report a strong set of numbers on the back of ramping up of its new capacities, stronger volume growth, and higher spreads. Now, strong volume growth is mainly because of the refinery of gas cracker and the paraxylene unit of the company. However, the E&P, that is the exploration segment, is expected to report a higher loss, mainly because of lower volumes, but some of it will be marginally offset because of the higher crude and gas prices. However, the consolidated numbers of the company is expected to be boosted by Reliance Jio. Now, Reliance Jio is expected to report a good set of numbers, mainly on the back of strong customer addition and higher contribution coming in from the Prime membership fees. The company's revenue is expected to rise by 6% to close to 7,263 crore rupees, while the EBITDA is expected to rise by 5% to 2,759, and margins are expected to be stable at around 38%. Net profit is also expected to rise by around 16% to 584 crore rupees in the fourth quarter of financial year 2018. Now, average revenue per user, that is the ARPU, is expected to come down a bit to around 140 rupees, mainly because of the tariff cuts that we had seen in the start of the quarter. Now, this margin, now the ARPU is declining by around 9% compared to the third quarter of financial year 2018. Now, key things to watch out for would include contribution of the Prime membership fees to the total revenue, management commentary on the tariff changes that they're expecting for the rest of the year, the capex plan for financial year 2019, updates on the launch of commercial launch of broadband and the DTH business, and the updates of timeline and of completion of the recent acquisitions that the company has made. Now, Maruti will also be reporting its numbers. That's India's largest car maker. Well, we have Agam with us to give us more details on the same.
Sure, Samit, it's going to be a very strong quarter for Maruti, and as we've seen that in the volumes as well. I'm going to start off with your headline numbers. We're expecting about 14.5% growth in its top line. EBITDA expected to rise 28% on a year-on-year basis. Consequently, we could have an expansion in margins at around 15.6% against 14%. And profits could also grow by as much as 22% on a year-on-year basis. As I mentioned, the one reason why we have strength coming in is the volumes. We are expecting volumes to grow by around 11.5%, largely on the back of strength coming in Baleno and Brezza, and net realizations could improve by as much as 2 to 3%. Do remember that there was a 1% price hike, which will aid your overall realizations, and the currency impact may also rise to a royalty provision, and that could actually bear down on margins and partially offset the growth to a certain extent. That said, among key things to watch, we will be watching out for update on demand trends and new launches, clarity on action plan under Suzuki-Toyota partnership, and of course updates on the royalty reduction proposal as well. But on the whole, we're expecting good earnings from Maruti Suzuki. But that's not all. There's yet another company, UPL, from the Nifty 50, which is announcing their results today. Yash Upadhyay is here with the expectations.
So it is expected to be a mixed quarter for UPL. Now their net sales adjusted for excise is expected to grow by about 10%, which is in line with the management guidance, coming in at about 5,900 crore rupees, driven by higher acreages of soybean in both North America and Latin American markets. India and Europe is likely to post moderate growth, while the rest of the world markets are expected to post a strong 15% kind of a growth. Margins are set to expand on expectation of a price hike, which the management had announced back in February this year. Margins are expected to come in at about 20.7% versus 19.4%. Net profit is slightly lower. We are expecting about a 4% growth, coming in at about 772 crore rupees as tax outgo increases for the company. So all in all, we are expecting a mixed quarter for UPL. Back to you.
Let's also get your check on the top 3 stocks that you need to watch out for based on yesterday's delivery buying and selling. 2 of the stocks that today we are going to discuss are from the banking space. The first one on your radar should be Axis Bank. Now, though it was down about 1% in trade yesterday ahead of the earnings that we got after market hours, almost seems like the market knew something, where the delivery selling came in at more than 450 crores. The delivery volume actually surged nearly 3 times as compared to its 5-day average, and the total volume almost more than doubled as compared to its 5-day average. Second stock to watch out for, again from the banking space, State Bank of India. Now, once again, that was down nearly 2% in trade and saw delivery selling of more than 300 crores. The delivery volume actually more than doubled as compared to its 5-day average, and the total volume surged just about 57% as compared to its 5-day average. Last and final stock to watch out for, HDIL. Now, that was down about 5.8% in trade and saw delivery selling in excess of 50 crores. The delivery volume actually more than doubled at as compared to its 5-day average, and the total volume surged nearly 90% as compared to its 5-day average.
Well, there's an historic event happening not too far from India. In fact, right now, North Korean leader Kim Jong-un has become the first leader of his country to enter South Korea since the peninsula was divided 7 decades ago. The talks, which are the third meeting between the leaders of the nation since the Korean War and the first since 2007, will go a long way in determining whether Kim can eventually strike a deal with US President Donald Trump. Now, Moon Jae-in and Kim Jong-un started their meeting at 10:30 a.m. local time, that's 7 o'clock here in India. The two delegations will then have lunch separately, after which they're scheduled to plant a tree, symbolically of course, near the border. Finally, they're expected to sign and announce agreements after the summit, following which Moon will host Kim at a banquet that starts at 6:30 p.m. at the Peace House in Seoul. The North Korean leader is expected to return to his country after the banquet. Now, you'll find more information about that meeting and its implications on the website bloombergquint.com, but there are also several other stories that you'll find there. Prime Minister Narendra Modi arrived in Wuhan province in China yesterday for a 2-day summit starting today. The two leaders are slated to exchange views on a range of issues of bilateral and global importance. Government think tank Niti Aayog has said that 35.3 lakh new jobs were created between September 2017 and February this year. It said that this data came from the Employees Provident Fund and from the PFRDA. All right, that's all you need to know going into trade today. Up next is Indian Open, and that will take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.